So the price action pattern that I'm going to show you guys today generally happens in small cap NASDAQ stocks. I have personally not seen it happen on any other sector. It's possible, but I just mainly focus on small caps. So this is where I've seen it the most. And this is something that's called the all-day fader. I did not come up with this pattern. I did not come up with the name, but this is something that happens so often in small caps. And you really need to recognize it, because if not, you're going to be caught in what's called an all-day fader, where the stock just drops and drops and drops and drops all day with almost no signs of recovery. So the way that this pattern happens is that, number one, we have a stock that has news. The stock has a big pre-market spike that hits a level on the daily chart usually and sells off and sets a pre-market low. Once it sets that pre-market low, usually it is underneath VWAP. And then by the time market opens, it's going to open underneath VWAP. So what's going to happen is we're going to see a volume spike into that VWAP line, maybe break it momentarily, but overall it's going to get stuffed. And this is best seen on the 5-minute chart. Once this stuff happens, the last step that needs to take place is to break their pre-market lows. Once this happens, it is almost always a confirmed all-day fader. And it is going to fade all day no matter what, because every single long on the chart is trapped. So I'm gonna break it down on the screen so you guys can see it better, but this is basically it. You have a big pre-market spike that sells off for most of pre-market and sets a pre-market low, and it's under VWAP. Market opens under VWAP, has a big volume spike into the VWAP line, sometimes over it, but it sets a top wick, meaning it got stuffed. And then once it breaks the pre-market lows, like I said, it's almost always going to be an all-day fader, and you really want to avoid trading these stocks. They almost never ever reverse, and when they do, it doesn't really happen that often. So the main lesson is you don't want to let the exception dictate your normal trading. All right, so we're going to hop into my screen and break it down. All right, so here's a good example of an all-day fader. This is EDNT, and I actually traded this stock today in pre-market, just because in pre-market, you don't really know for sure if it's going to become an all-day fader or not. So I was getting into EDNT based off of the daily chart support at around 275. I bought in 281, 275, and then at 271, and my overall risk was from the 1-minute chart. This early pre-market resistance, actually pre-market support, down underneath 255. So my average was just around 275 in this support here. And you cannot see it here on eTrade Pro, but the VWAP was around $3, meaning that, this stock was under VWAP. So I had recognized that during pre-market, and the thing I did was, like, I knew that, this could potentially become an all-day fade. So I was prepared to identify the pattern in real time in case it did come up. So we can see that over the last few minutes of pre-market, it had a very weak sell-off, and it sold off and it actually broke the pre-market lows first. But on the 5-minute chart, that was only a long bottom wick. So it wasn't really confirmed if that was a true breakdown, but I'm seeing more signs of this being a potential all-day fade. So I'm going to be very prepared, to exit the trade if it confirms my thesis. So we can see back on the 1-minute chart that, we had that very big volume spike, very big volume spike through VWAP. And once I saw this, my main thinking was, okay, if this is a true short squeeze, it's not going to fall back under VWAP. Whenever we have these big morning squeeze reversals, these stocks, they almost never fall back down VWAP. They always squeeze right through and go straight to the highs. They almost never have a pop through VWAP and then pull back down. So recognizing that this could be a VWAP stuff and it could be the beginning of a huge all-day fade pattern, I simply set my stop at around 288. I set a stop at 288 and I said, okay, if this is a true squeeze, it is not going to fall back down. But if it does fall back down, then this is going to be a very obvious like VWAP stuff, lots of short sellers are going to hop into this selling, and lots of longs are going to be exiting because this is no longer a strong setup. Eventually, my stop was hit and I was saved like from being caught in this big all day fade pattern. Now, usually I'm a very big advocate like of always follow your plan and only exit once either your profit target is hit or once your stop is hit. But in terms of this, where you can identify and see the all day fade pattern happen, it is okay to modify that plan just because then you can save yourself some money. In this case, my average was around 275 and my risk was underneath 255. So I was risking about 20 cents a share. And the thing about the all day fade pattern is that once you recognize it, almost guaranteed that it's going to keep falling down. So there's no reason like to wait until it does hit your stop. Because the main thing with this pattern and why it's so powerful is that once you have this very, very big VWAP rejection, what that signifies is that every single long from pre-market is underwater and is trying to get out. Number two, this is like the number one pattern that lots of short sellers use, and they're going to be shorting on every test of VWAP. Every single lower high, they're going to be shorting it. So you just have to recognize that the trend has changed completely and it's no longer necessary to be in this trade. So that's just a quick lesson of the all day fade pattern. Let me know what you guys think down below. Hopefully this helps you guys avoid this, and hopefully you guys don't get stuck in the next one. I'll see you guys in the next video.